Rising interest rates are pouring some cold water on Toronto's once red-hot housing market.
Cold water on Toronto's once red-hot housing market.
Hey everyone, welcome back to Mark Loeffler Experience. Happy Monday, everybody. Today we're going to talk about headlines and the differing headlines. We know that prices have come down a lot since the peak in Ontario and some of the larger population centers in Canada. Right? We know that. Okay. Get it, got it. Now, we also know that the news people are a little slow sometimes. So when they're calling for something else is actually happening. And, you know, I'm reading this article this morning, Canadian real estate prices to fall lower. Okay. I think we're probably going to see that too. Worst cases have returned to 2014 values. What does that mean? So again, this is just my real estate board. I'm not talking about if you watch the last video, you can see which boards are included. And thank you everybody for jumping on there and in the comments and saying, hey, we'd like to see here. I will make that happen for you guys because I have the data for those ones that I saw people ask for. So average sale price in January was $723,000 with about 3,000 sales. Okay, now we go back to 2014 at the same time. Nope, let's say 2014 was $328,000, almost $329,000. Let's round up. So 329 to 723. Well, that's over 100%. So we would have to fall. I guess we could do the math on this real quick. Let me grab my calculator. Let's do the math on this real quick of how fast and how far this would have to fall. 723, 23 minus 329. 329. You didn't think you'd be doing math on Monday morning, so it's $394,000. So now we divide that by 723. So we would have to fall 54% more right now. 54% is what we would have to fall from today's pricing. I'm not even doing that from the peak. The peak was 983. So we've already fallen 260,000 from the peak, which is right around that 30-ish% mark, right? So we're already fallen from the peak. That's 70% from the peak. Hey guys, I know there's people calling for that out there, but I don't know. I have a hard time believing that's going to happen. But this is from Oxford Economics, updated its housing outlook for Canada today with a key insight being home prices are still projected to fall further. What's that mean? 1% or 54%? That's a good thing with economics. I can say, hey, prices are going to fall further. And I don't have to really put anything in there. They say, though, that Canada is only halfway through the correction. They say that Canada is only halfway through the correction if things don't break. That doesn't mean anything to me. I don't know what that means. If things get really bad, though, the firm warns that home pricing can be cut in half, falling back to 2014 levels. So then it goes on to say, well, obviously Canadian real estate prices are only halfway to the bottom. Let's be honest. That would be a tremendous, tremendous buying opportunity. I would, for one, really enjoy that happening. I would. But yeah, Canadian real estate prices are falling. Or they've fallen. They're not falling as much anymore. They're on a little slower, steadier decline right now, maybe like 0.5% a month type thing in Ontario, in the markets that we're looking at, whereas other parts of the country are, seeing a normal market because they didn't go up 30% in 3 months like some places did. The firm's baseline scenario forecast to see home prices falling 30% in total from peak to trough. Okay, we're already there. We're already 30% from peak to trough. That leaves us just under halfway to the target with another 17% to go. I don't know what numbers they're looking at. I don't know if they ran these numbers 3 months ago, but I already see that we're peak to trough. Like peak in February, trough is close to now. Like this might be the trough, it might not be, but it looks like we're doing a bottom to a trough here, like we did here, like we did here. Like that's a trough. There's a sharp V, right? This is a U. Obviously back in the 2010s and that type of stuff, it was just, you know, up and down. It was just steady. Those are great investment days. Whoa, we had a huge price drop in December 2012. I remember those days, man. We were buying stuff and we're like, this is like, it's going out of style. And then January showed up and we're like, hey, we all look like geniuses in December. Apparently, the time to buy was always in December. Look at that. Who knew? Maybe it's this year the same thing. All of Canada's 12%, but we know that's going to fall, right? Like that's just, and this is what they're looking at. Like they're not diving deep enough into the numbers, I think. They're just looking year over year numbers, and that's kind of what they're going with right now. It doesn't, you know, these are reputable organizations. Like they're saying that Calgary's down 12%. When I see it's up year over year, 8% in December to December. It's one of the only places that is. Or maybe that's what they're calling for, more modest movements from the peak. And again, time will tell if I'm right, if they're right. But I guess here's what they're calling. Here's their forecast, right? A moderate upside. I don't think they give us, let's see, okay. So the moderate upside scenario is the firm's view of what happens without a recession. Inflation subsides very quickly, real incomes get a boost, GDP rises 0.4% in 2023. So when we talked about RBC and their forecast, this was, I believe, 20%. That we have basically very little growth, don't go into recession, and this is their soft landing scenario, right? They predicted more that we go into a moderate recession. In this scenario, home prices fall 27% from peak to trough, which we're already at. Yes, home prices still fall since they're already falling and adjusting to the lack of affordability. Humans tend to move to opportunity. Unstable shelter is unlikely to continue to attract people. Anyway, we're still going to attract people from around the world. Because again, Canada is seen as a safe haven for their money, for their safety, for economic opportunity. It's seen like that around the world still. All right, so moderate upside. So they're calling for, what's that, February, March to be the bottom, and then we're going to start to climb and moderate upside. Okay? Baseline is, which I would assume, moderate downside is the GDP contracts 3.3%. In this scenario, home prices fall 34% from peak to trough, which I think we're kind of there. And this is what I see more happening is the baseline or moderate downside, where we come through the trough, we pick up a little bit, and then we flatline. I don't think in this scenario right now that we see a big, like a dead cat bounce, they would call it in the stock market. I'm seeing more of this. And and again, based on RBC Economics predictions, Benjamin Tall from CIBC, is we're going to see a recession. It's going to be a slight recession, and like this is, again, what we're going to see. And okay, severe downside. Let's see what they have to say. Severe downside. So for us to follow the 2014 numbers, an extreme tail risk event that involves a shock to the financial system. In this event, GDP contracts 9.9% from peak to trough, typically over a period of time instead of just 1 year. Persistent lower output and capital accumulation occurs with a severe shock to the credit supply. In this scenario, home prices collapse 48% and fall back to 2014 levels. So they're saying 9.9% decline. So I'm just going to say, we shut down our entire economy, a lot of our economy, and we had a negative 5.23% GDP growth in 2020. So they're calling for almost double that for us to get back to 2014 numbers. Comment, how likely do you think that is to happen right now? I don't, like, in my mind, that's just a we're gonna throw this out there so we can put this nice headline on there, right? Like, let's look back in what's that, 2000, that must be 2008, right? 2009, yeah, 2008, 2009. It fell almost 3%. But they're saying cumulative, so maybe, I guess that's 7, I don't know what so annual change was negative 7.1. So actually it's closer than I thought. But you're 5.8, so you had it here in 08, 09, and that was just a credit crunch, which didn't actually affect us that much from a banking standpoint. Canadians could still get mortgages, and that's really what would have to happen for us to see that is the Canadian credit system would have to basically implode for us to see a 9.9% decrease. Like, corporations can't get loans, home buyers can't get loans. And this is basically what happened in the States in 08, 09 is the credit system screeched to a halt until the government poured trillions and trillions and trillions of dollars into the market and basically freed up, and they became the lender at that point. Anyways, I think this is a great Monday video. You guys let me know what you think. Is this gonna happen? Is this really gonna happen? Are we gonna see 2014 prices? I mean, I would love it. I'm not gonna lie. I would be so happy if we saw 2014 numbers like that. It'd be amazing. But anyways, comment down below. You guys let me know what you guys think. Investor meetup's going to be on February 27th. We're going to post the link. It's an Eventbrite link. We are limited in space, so do register early. And yeah, it was great seeing everybody at Corey McKinnon's event this weekend. If you didn't see me, or if you were there and didn't say hi, I'll forgive you. And if you are now watching the channel because of that, thank you so much. Thanks everyone. Have a great Monday. We'll catch you next time.